All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Interesting open for a couple things, but if you're looking at the market indexes, and the movement on them, it's pretty blah, pretty boring, pretty meaningless, in terms of what it's doing and what its action is. We have seen a change this week in some of the market action. We've just seen this change from, we get a few shots down and then we just bleed higher and push into new highs. This week we get a few shots up and then they get sold. So we're just kind of seeing a little bit of difference there, but it's not enough to be that meaningful. In terms of what happens going forward, obviously all eyes are on, Saturday and what China and the U.S. and trade. And, the reality is come Monday, there's still going to be more questions that are asked. It's not going to be hey, everything's solved. And, it's one where we're probably going to get a gap in the market, and a lot of market participants kind of waiting on that. Now, whenever we have market participants waiting on a piece of data, we see this all the time with the jobs report, right? You have buyers waiting on the data, and the jobs report comes out, and the market shoots on down. Right, and everyone's, oh man, terrible jobs report, market's going to go down. Then those buyers step in, and the market goes higher. Right, they weren't waiting to make a decision based on the jobs report. They were waiting to get in until the jobs report. You see it on the opposite side, where, there's a bunch of sellers waiting in the market, and they wait for the jobs report, and jobs report's really good, market gaps up, boom, big rally, and here come the sellers, right? They were waiting to sell till after the report. And so I this is one of those situations where I don't really believe that too much of what happens this weekend is going to change the mind of some of the big money that's out there. But I do think a lot of the big money's out there waiting to get in until after, what we see here on Saturday. Now, I could be dead wrong. I could be dead wrong there, but it just kind of feels like that type of event right now. All right, so indexes fairly quiet this morning. You can see the S&P, pretty much, sitting around where it opened, a few points off from where it opened here. We see a clear leader in the market today, though. We still have a lot of market differentiation out there. This isn't this market of, hey, everybody into the pool, everybody out of the pool. It's a market of rotation. And today we see healthcare, tech, real estate, kind of getting rotated out of a little bit. Financials, utilities leading the way. Right? Banks last night after the bell, the Fed came out with the stress test results and basically allowed all the banks to increase their dividends and their buybacks. Different banks have different stipulations, but that is helping to push the banks on higher here this morning en masse. It's not like we're looking and going, well, one bank, this is really different than another bank, right? You go and you look at J.P. Morgan this morning, and it's up 2%. Right? You look at Goldman Sachs this morning, it's up 2%. You look at Bank of America this morning, it's up 2%. Right? They're all trading en masse. This isn't, this is very specific to Bank of America or very specific to Morgan Stanley. It's specific to the entire sector, and we're seeing the entire sector kind of do the same thing this morning. Open up, get bought up, and then just kind of fading here since the open. But anyway, that's kind of what's going on out there. Again, market kind of on pause. Just waiting. We do see a few upgrades, downgrades affecting a few stocks here and there. But let's get to the challenge. No new signals here this morning. We do have some crossovers going on. We have a downside crossover here for Boeing, but that's not going to signal here this morning. It's not even close. Consolidation risk just too high, and you see where it is relative to its 39-day range. Very high. We see some downside crossover action coming in. Let me pull it up. I didn't note which ones were just because it wasn't all that significant. None of them were really even close to triggers. But let's see if we can just pull up the 3-7 crossovers. Well, maybe not. Sorry, Boeing was a downside crossover. And the upside crossovers, yeah, we have FedEx, Honeywell, J.P. Morgan, Nike, and all of these have a little bit of a different story. Nike has earnings, right? Nike has earnings on it. Option traders for Nike getting crushed here after the earnings. We have Honeywell, which, yeah, it's been crossing up, crossing down all week, but more indicative of consolidation, not trend. FedEx, who reported earnings here this week, and after initial reaction lower, has been just kind of steadily pushing on higher in a rather bullish way. But 3-7 crossover, not enough to create a signal. Here you can see it's still trading near the low side of its range here with FedEx. But it is one that does have a higher low coming into play. And so I do want to see where it sits at the close, because it could be a signal by the close. And, my bias on FedEx. I'm not very bullish, but, if it signals, I will trade it and go. All right. So no new trades to make. We have 2 trades on the board. We have Bank of America and American Airlines. And, neither of these are in positions to really do anything about this morning. Bank of America, $1.77 is where the option's sitting right now. 177, so let's go fill that in here. 177, and then with American Airlines, the option is sitting at let's see, we're up a whole $45. The option's sitting at 201. All right, so 201. So nothing really to write home about there. With it, up about $900 on the day. So we'll take that for relatively flat day. But lots still to come here today with the with the market. You'll notice we're not near our stop levels. We're not near our profit levels, and we're not near our exit level or exit time date here for them. So no decisions to make. Several times I've talked about the challenge in this setup here. It's going to drive certain types of traders nuts. One of those types of traders are top pickers and bottom pickers. Going to drive them nuts. And the top picker in me is being driven nuts here today with Bank of America. And, I watched this thing shoot up to 29.20, and my brother was in the office with me. I looked at him and I said, man, this is the high for the day. And he's like, well, why don't you get out? Well, because my rules won't let me. And, he had kind of a chuckle about that. But it is one of those things where, the high is in for the day. And, I'm kind of hoping we'll see it float back to around 29 before the close. But the challenge isn't about picking tops, picking bottoms. Isn't about any of that. It's about trading the trend. And yesterday's signal suggested that we would see some upside trend form. There's nothing today to kind of take that away and to dissuade that. The other type of trader that the challenge is going to drive nuts are candlestick traders, right? Because you look at a candle like this and you go, oh man, right? But challenge doesn't take candles into effect at all for anything, and it won't, right? And one of the big reasons is because there's not enough consistency, when it comes to candles, whether you're looking at engulfings or ladders or dojis and all the different types of candle patterns. The best of the best candle patterns, their accuracy is in the upper 50s to lower 60s, in terms of accuracy of calling the next little move, and that's not even speaking to trend. So Bank of America probably if you're one of those top picker bottom picker type of players, or have a little bit of that in you, it is probably gonna here a little bit today. But bottom line, and you'll see me continue to do this. It's running the challenge for what it is, and with the parameters that it has, and letting some of that other stuff just go. Right? I'm not looking at the news and going, oh man, how do I analyze this and what does that mean? And we got a stock buyback. Banks are going to be buying back a lot of shares, and they're going to be upping their dividends. and that's a general positive for banks. But we are also going into an interesting weekend. We're going into a period where the Fed's going to cut rates. We're going into a period where there are just a lot of different different factors up in the air, and that's nothing new. That's nothing new. That's nothing different that will continue, and we'll see some volatility and opportunity created here from that. Now, the economic data here this morning, and let me come into Econoday because I put a note on the Chicago survey here this morning. I put it into the message feed, and I noted, look, the economic data continues to erode, and it continues to erode at a fairly brisk pace. And it's not all pieces of data, but this is not new that the Chicago PMI number is falling off. We've also seen the ISM number falling off. Both these numbers have been falling off for a while, and we've talked about this all year, right? They were still showing growth, but at a slower rate. Chicago number today actually showed contraction for the first time. So, first time in 2.5 years shows contraction in the Chicago PMI number. And, we just continue to see this data that's been slowing start to dip its toes into actual contraction here. Now, there are a lot of arguments. Is the economy in a recession already and all of that kind of stuff? You'll see those headlines and those articles that they're kind of all over the place out there right now. But as far as the market goes, market's looking 6 months out, and they're going, okay, is this going to get worse? Is this going to get better? But the actual numbers that continue to come in continue to erode, continue to get worse, continue to give the Fed more reason to essentially cut rates fairly quickly. It also lends credence to the argument that the Fed should have already cut rates, right? And the Fed wasn't going to cut rates this last meeting, just simply from an independent standpoint. But with all this kind of data starting to look to the downside, there is a piece of data that came out this morning that went, ooh, wow, that's interesting. And why? Because it was quite stronger than expected. Personal income up 0.5%. Right. Month-over-month change, 0.5%. Consumer spending came in at 0.4%, so higher than last month. And last month was revised, up to 0.6, so after the revision, a little lower than last month. But we're actually seeing growth and some strength in here. But the PCI price index, which is an inflation measure, still well under the 2% that the Fed is looking for. So it's one of those where you go, okay, there's a little silver lining here, little decent, data here, but it's not one of those pieces of data you look at and go, well, this gives the Fed reason to not cut rates. In fact, this data tells the Fed, hey, cut rates. You're behind your inflation target. So you gotta drive those rates down, and so that's what we're seeing in some of the data here this morning. We're gonna get a lot more data here next week, and it kind of brings the market to question, and is the market data driven right now? And the reality is no. The data we see right here right now, the market's not basing its decisions on. It's what they expect from the data going forward, and right now the market still continues to look as, hey, there's a few things out there that could really help. If they don't come in and help the market, then we could definitely see some of the sentiments change. We're starting to see some of those sentiments change here, this week. But we are still in a market. When you look at the overall investor sentiment, it's nowhere near overly bullish. In fact, it's bearish like we rarely see at tops. And last week we looked at that. You can go find the video in the archive. But that data hasn't really changed this week. That data, we still continue to see a pretty bearish view from from investors, and for contrarians, they look at that and say, "Hey, the market's going to go higher," right? But that's kind of where we sit. And so, if there is some positive, it's something where we can see the market chase higher very, very quickly. We'll kind of see how it all plays out here. Okay. Alrighty. Well, thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon, and we'll talk to you then. Take care.